Good morning, traders. It is 8:11 a.m. Chicago time on Friday. Happy Friday, everyone. It is June 11th, 2021. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2012. We're starting 10 minutes late today. I had to look at this morning's volume. As I said yesterday, I normally roll with the exchange, which creates a bit of a throwaway Thursday on the official rollover day yesterday. But I decided to hold off and let volume roll, and so I had to wait till this morning to see what volume looked like, and it was clear that the September volume was higher than March's volume. That the roll is well in progress and is actually a little bit ahead. And so that required me to do all of my homework this morning after what was a somewhat of a sleepless night because of my 3-year-old having a cold. So all in all, it's stacking up to be a day where I need to keep my finger off the mouse pretty much most of the day today. Let's dive right into things here. We will take a look at this pre-market summary sheet. The pre-market summary sheet today is showing us that we have mild risk on across the board. The indices are higher by an average of about 0.5%, 0.45%. Silver leading the pack today with copper. And again, mild risk on, multi-distribution profile. The S&P has 2 distributions so far today. Overnight inventory at 47%. Let me verify that. 51% volume so far, 87,000 contracts. And what we have to look forward to today is just a slew of numbers. The same number basically at 10 o'clock. Michigan current conditions, Michigan sentiment, prelim. This is a mover. This number is a mover. You'll want to pay attention. Again, we've traded 87,000 contracts in the S&P. The volume is very low because of rollover. Volume and delta during this period are going to be iffy. We cannot lean on the delta during roll, and depending on how well the roll is going, in other words, how complete it is in general, traditionally the roll is done by Wednesday. It's done by Wednesday next week, and we can go back to and what does that mean? That means by Wednesday of next week, we expect that pretty much all the volume that needed to move from June to September has moved, and so those trades which actually go through the exchange through calendar spreads, those trades are done, and now we're looking at pure trades where participants are lifting or hitting the market as a result of their perception of future outcomes on price versus hitting or lifting the market as part of a calendar spread. So very important to know the distinction, very unique to futures, something equities folks don't have to deal with, but it happens 4 times a year. Let's take a look at what was expected yesterday versus what we got. Yesterday, again, made a case for the fact that we have a very weak high, a triple top at 42.35 in June numbers. Now I'm quoting September, by the way. Everything is September today. I believe I put it online. The roll. 1 second. I'm going to give you the roll factors. Wow. My feed was very busy yesterday, so it's kind of crazy, but I'm looking for, here we are, the roll factors. 9.5 points is the difference between the SEP and the June contract. We subtract 9.5 points to get June prices to match September's. And so just keep that in mind as we're talking here. 42.35 is a triple top. The expectation is we are likely to pull back a little bit on the open and then power right through to 40, consolidate at 40, and then power right through to 50. That was the expectation. That was scenario one as shown right here. So I'm looking for it to struggle at 40, push to 50, right? This is basically what happened yesterday, but not in a way that I would have liked. It did much more. It moved much more in an open drive at the open and completely ignored that 40, which remember, 40 for us is 30 half in the current June contract. So powered right through, and the 50 is 40 half in the June contract, and it went to 39.5. So it missed that 50 by 4 ticks, in the June contract. And then it came back. Then we get this trading around the equivalent 40 in June, 30 in September in the September contract. Then we get this respect for that measured move before the market reverts back and moves right into the LVN of the double distribution of the prior day of Wednesday. Consolidates, makes a higher low against the prior low, which was 42.07, and then back up and consolidates in the middle. Yesterday, new all-time highs across the board, not across the board, but in the S&Ps. The other products, the Russell and so on, are actually relatively weaker, and then we held and closed at the highest price in recent history, settlement of 42.2875. So overall, we've migrated higher. We've moved prices, the lows higher here, and moved value higher as well. Delta was negative, but again, you got to be careful with Delta in this environment. Removing our levels here. So here's the announcement for inflation. Market rallies. Market kind of overshoots, comes right back, and then consolidates and finishes somewhere in the middle. This morning, we've got 88,000 contracts. We've got a double distribution right here with the market holding in the upper distribution, above mid, above VWAP, and that's how we're coming into today. So showing, as indicated in the pre-market summary sheet, mild risk on, and in either case, it's risk on sentiment. And the next level up I have is 52.56 in the June contract, 52.46 and a half in the September contract, and that's looking good for today. I'm not going to make this a long one. There's not much more I can contribute here other than the fact that it is Friday, it is rollover, and we are likely to see a lot of anomalies in the order book. Looking at yesterday's order book, we still have, if we look at the order book for September, which is fairly thin, we still have that offer at 42.50, which is still in the June contract. Did not budge. It was 800 contracts on a large block, and then the September contract has it at 42.50. The equivalent would be 42.40.50 if adjusted, and 42.40.50 in the in the September contract, which is what you're seeing here, doesn't show that size. So this is an option. This is an option delta hedge or an option strike, mid-century type of play, and the volume is relatively large for the current book for September. So this is where we stand here. Not much else in the order book to talk about. Overall, 42.44 has some liquidity. I'd like to take a look at this chart here and look at what we've got overall yesterday. Just a double distribution type profile, and holding sideways in the overnight session, holding sideways in the upper distribution. So this overall, this is looking like it might push higher. It might push higher coming into the session. So let's move on to what's expected for today. Setting up the chart right now. Okay, so what are we looking for today? Primary scenario. Again, rollover in full swing here on this Friday. Primary scenario is a continuation of the push higher. So what we have here is a bit of an impulse higher pullback to the mid VWAP right here. Mid VWAP pullback, most likely a continuation. I'm looking for it to push the 42.40.50, which was the 42.50 before. And I'm looking for it to push that 42.40.50, consolidate for a bit here, and then squeeze into the 42.50 again before it falls off and ends up going sideways into the weekend. So overall, yes, I do. I'm going to be trading from the long side, but overall, I'm not going to be pushing the longs. We saw yesterday that once we pushed to 50 in the June contract, it immediately came off. I'm expecting the same sort of behavior. We're not seeing buyers holding on to prices very well. The secondary scenario here is an open that squeezes into the 40 and then has a reversal, almost an open test drive down, but not expecting an open test drive. Under these conditions, more of an open rejection reverse. Comes back to the overnight point of control, which is currently at 42.31-ish or so, and then moving into this area of 42.22 before holding steady. So again, what are we looking for today? We're looking for a test of 40, 40, next area 47. I'm expecting that to be the cap. This is the equivalent of the 56 in the June contract, and then I'm expecting it back at 30, and then potentially dropping into this 22 area. 22 area to give us about 18 points of range for scenario 2 and about 15 points of range on scenario 1. I'll leave you with that. There's not much more I can provide here, and we're getting close to the open. Good luck. It is Friday. It is rollover. This is not the day you want to push it. So step in your targets and step in your stops to keep your R factor solid, and just take what you can get today. Be patient. Wait for the market to kind of prove itself to you for you to participate before you throw your first punch. Wait for the market to tell you which side has the strength to win in your time frame, whatever the rotation is that you're trading. Good luck, and I'll catch you on Monday. Take care.